So this is Jesse Livermore's Edge, and this is about reading the tape. This is the most important skill that anybody who's trading has to master. This is reading the tape, and all great traders are spontaneous people. Jesse Livermore is an example of spontaneity. And with everything, there's always a way to trade, and trading itself means to tread. To trade is to tread. So trading is a skilled way of making money. So there's a way to trade. And the only way to trade is actually reading the tape. Paul Tudor Bismarck says that at the end of the day, I'm just a slave to the tape. Like, reading the tape is the ultimate way to be able to make money in order to make a consistent profit. So you need to have an edge. So here we're talking about Jesse Livermore's edge, and the edge is what we're actually talking about. So this is the ultimate edge in anything that involves trading, and this edge is um, reading the tape. Reading the tape is the ultimate edge. So great traders are always on the edge. And an edge is any advantage that a person has. That's an edge, any advantage. To edge is to move forward. You can say the car was edging toward the other end of the street. This is an edge. So it's to move towards something. And an edge is a way to tread. So trading is treading. So to trade is to tread. And to move towards something is to have an edge. So trading is all about having an edge because you have to move towards a certain direction. You have to move towards a certain result. So to have an edge is to have a point. So when you're going towards something, you're moving towards something, or you're moving towards a certain point. This is having a trading edge. When all of your ideas and all of your trades are formulated by having a certain idea based on where you are taking the trade and how it is actually going to be shown. So it's having a point. This is an edge. So this is also an edge. This is an ultimate edge. So this is this is a katana sword, and these samurai swords are edges, and they they are the ultimate edge. All right. So when we're talking about edges, we're talking about having this edge or having this point. So when we're trading, we need to have a certain edge or a certain way that we are moving towards, a certain track, a certain trail. So samurais were warriors in a class society. Actually, samurais were an actual class of people. They were an actual strata in the society. And their idea was that they had to fight with strict moral codes. So in their whole worldview, they were actually fighting evil. They were good against evil, just like Samurai Jack and Aku. So it's actually funny that there were actually female samurais at some point. And one thing about the samurais that was their actual edge is this moral inclination towards whatever they are doing. This was the secret of the samurai. This was the edge of the samurai, and this was the power of their sword. So sword actually means words. So when they are using this edge, when they're using their moral when they're using their moral mindset, moral integrity, when they are integral in their actions, this is when they have an edge in what they're doing. This is just straight samurai, and this is how they were actually built, and this is how they actually lived. This is why they had the stuff like the seppuku, when you are dishonored in battle or something like that. You don't give up. Instead, you you take your own life, and this is what these people used to do. A guy would kill himself. You take a sword, and then he would kill himself, and then his best friend would decapitate him. So this was an honorable way to die. Or if they had more time, this is how they would do it in a battlefield. But if they had more time, it was like a whole ritual. They would first like cleanse the person, and he goes through this whole process and has a last meal. This is where it actually came from. He has a last meal, and then he actually uh, is handed a sword, and then he offs himself. And this is how they actually lived, because this was their moral code. So this was all because of the sword. So swordsmiths ended up having some sort of significance within Japan, and these bladesmiths were the people who actually used to use these swords, and all of the bladesmiths were able to make use of all of the spiritual aspects of making the sword. So when a bladesmith was making a sword, it was a whole process of having the idea of the sword, having the idea of the weapon, having the idea of the technique, and actually not using it. So they'll go through um, uh, like a whole month of just cleansing and going in the mountains and stuff like that. And this is how the actual swords were made, and this is the way of a samurai. So I just thought that it was pretty interesting, and because the discipline is the greatest edge, and be it a samurai or be it a trader, if you have discipline, this is the greatest edge. And samurai warriors had to first choose their weapons. They had to know their weapons, and they also had to test their weapons. So you have to also know that there are different ways of trading. There are different types of elements that you have to know if you go in any field. There are different types of doctors, there are different types of engineers, there are different types of teachers. So you have to know that there's a variety, right? And not everything is as useful as everything else. So you have to choose the right weapon. So a person who has a sword is a person like Mad Jack um, from World War II. He actually went in the thick of battle in World War II with just a sword. And this is how he chose his weapon. And he knew his weapon. This is how he was able to use a sword against people with rifles. This is how he actually fought. And testing the weapon. This is you refining the technique. So you'd have to be able to know exactly what is happening in order for you to get the best or the most out of your trading and out of what you're doing. Always remember that the blade comes from some crude metal. Just an ordinary chunk of steel makes the blade what it is, and then through sharpening it, through polishing it, through refining it, this is where it keeps its luster, and this is how you're able to actually use a katana sword or any other method. You have to polish it, you have to shine it, you have to refine it. So this is how you get to the point of having a single blade cutting through seven bodies at once. At once, one single blade could do that because it's so refined, because it's so polished, because it has an edge. It has a very, very strong edge. And it was never actually about the blade itself, it was about the person who wields the blade. So it was about how the person is able to use the blade. It was not about having a blade. So it was about having an edge, but also knowing the edge, testing the edge. And then if you have that, then you actually have a greater advantage. So the gun outdid the blade at the end of the day. This is how it actually happened, that the gun was more lethal, more efficient. So the bullet outdid the blade. But we cannot forget the fact that the disciplines of of the mind, the disciplines of actually having that ability are what are eternal. The lessons are very eternal, and these are pivotal in your trading journey, because you have to be able to understand the mentality, the outlook, or even even the scope of introspection, you have to have that in mind so that you actually know exactly where everything fits in. So you need to have precision. So now you have to be a marksman. You have to be able to to accurately assess each and every objective, and you have to do that with the ultimate precision. So here we're just talking about Jesse Livermore, and this is a very crucial book that helped me a lot in my trading. And this is the reason why I'm actually making this video in the first place, because this book is one of the most amazing books on trading, because it just explains everything so clearly. And I think it shows exactly how the roller coaster of Wall Street is, and how you need to have the emotional disciplines, you need to have the psychology, and as well as the professional attitude. So you can have the professional attitude all pinned down, but you need to have the emotional aspect of it already taken care of. So the point is not so much to buy as cheap as possible or go short at top price, but to buy or sell at the right time. So everything boils down to timing. It's all about how you're able to capture the right timing and the right time in the right market environment. This is what it's all about. And if you want to read this book, you should definitely check it out. It's a very pivotal book. So this is what Jesse Livermore. This is his autobiography, and this is what he actually went through in his life. His life was really interesting. So Jesse Livermore started at 14 years old. This is when he started trading in 1891. So this is a very long time ago. And in his time, everything was so different. So in this book, he's going through how everything was in a different era. But what's important about this aspect is that he talks clearly, or he speaks clearly about the tape reading aspect. And being able to read the tape is very crucial in order to make money, because you have to be able to interpret the price action, not just to read what the chart is saying, but to interpret the meaning of what is happening on the chart. And wherever you take it, you're going to be confronted with the aspect of reading the tape. So so here we're facing a different time. He was actually born in 1891. Jesse Livermore was born in 1891. So that's a different era. But all of the aspects of Wall Street have not changed. All of the aspects of trading have not changed. Everything is just the same. So this is actually a picture that is that is talking about new traders and experienced traders. So the cutthroat business in Wall Street is that the inexperienced traders lose their heads. And this is a really graphic picture. But there's a bull and there's a bear right on top of that blade. And uh, the experienced traders are sitting and reading a tape. So those are not ropes. That is actually the stock tape, and that is how they used to read and trade. And this is the method that Jesse Livermore used to use. This is reading the tape. And um, so you can see there are all those papers on the floor, but what's important are the people who are actually reading the tape. So this is the experience of the new traders and the experience of the experienced traders. So Jesse Livermore is considered the greatest trader who ever lived. And he actually started at 14 years. He started with $1,000. He started with a $6 profit in a single trade. And he started trading from $1,000 to $10,000, from $10,000 to $50,000. And he was able to make $250,000 in 1906 in a single trade of when he sold Union Pacific. So in one trade, he was able to make 250,000. In 1907, J.P. Morgan asked him to stop shorting the just to stop shorting any more stocks because in 1907 there was a financial crisis when the Knickerbocker corporation collapsed, and J.P. Morgan actually had to rescue the entire New York Stock Exchange from his pocket. So in the frenzy of all of this happening, J.P. Morgan goes to Jesse Livermore, and this is a true story. He goes to Jesse Livermore and asks him to please stop shorting the stocks because he just paid for the New York Stock Exchange to start running again. So this is what actually happened, and he made $1 million in a day. This is in 1907, and he made $3 million in that trade. So he made that trade, and in 1919, after the First World War, he actually lost his money after 1907, and then after the First World War, he was back again trading, and he bought so much cotton that he owned most of the cotton bales in the whole country. So President Wilson actually called him to the White House and asked the Secretary of Agriculture to to privately purchase his contracts because they couldn't be publicly auctioned on the public exchange. Because if they'd done that, then that would have tipped the balance of supply and demand, and they wouldn't have been to compensate for that loss. So they actually had to privately buy them from him. So that is when he actually made $10 million. Okay, so he made another $10 million in 1925 with cotton, and his biggest trade was in 1929 when the stock market crashed. He made $100 million when the market crashed. So he got the crash correct because of the tape reading technique, because he had this edge. So this was his last and biggest trade, but he made one of the best turnarounds in terms of him losing so much capital and regaining it back. And in 1934, he was broke after he made all of this cash, and he ultimately committed suicide because his life was so hectic. Jesse Livermore was a playboy. He was married 3 times to a wife he just met. They met for a couple of weeks, and then he married her. And he came from a situation of no education, no high background. So all he had was his instincts. So he was just going with his instincts, and that led him towards a, a path of lack of self control that made so many problems accumulate in his life. Because in his book, his reminiscences are a story of great wisdom because they are reflecting, so they are looking back. So all of the information that he's actually going through is very important in showing how he actually gets the mistakes he made and how he would actually fix it. So he's one of the greatest traders of all time because he had no advanced education or special training. He's straight from the bottom. Okay. And according to estimates that are adjusted for inflation, he made as much as $14 billion in today's dollars. So he made this from his own pockets. Because if you look at the hedge funds of today, the hedge fund manager could be worth like a billion or 2 billion, like Bill Ackman, for example. He's a hedge fund manager, and he actually gets people's money. He gets so many billions of dollars, and he manages those funds, and then he gets 2 billion. But in the case of Jesse Livermore, he made 14 billion with no outside money. He made 14 billion from nothing, from $1,000. So this is why he's regarded as a goat, the greatest of all time. And when he did all this, he traded in thin liquidity. Just imagine that they had no they didn't have the technology we have today. They didn't have these screens. They didn't have a person like me who's talking about this, showing people about this. They didn't have all of the access to information like we do, and they actually didn't have all of the privileges of electricity and of technology. They had electricity, definitely. So they traded in thin liquidity. So there was not so much movement in the market because there weren't so many people who were trading at all. So he did all of this, and he also did this with no charts whatsoever. So he made no reference to charts. All he did was reading the tape. So reading the tape is what this is all about. So this is being on a level of placing a trade by reading an article in the newspaper, or placing a trade by knowing exactly what is going on. So he was able to do this with no charts, no internet advantages, no anything, just the numerical sequence of numbers. So tape reading is all about price levels. So the picture right here is an old bucket shop, and this is where people used to trade, and they're looking at these numbers. So they're looking at these numbers, and these numbers are showing them the price and the time. So tape reading optimizes your timing. So this is what it actually helps you to do. It optimizes your timing so that you be able to make the trade at the right time and in the right sequence. So timing is everything when it comes to trading. So when you're trading, there are only two things that you have to consider, which is the price and the time. And when you're trading, this is gonna be the thing that you actually have to take note of. So so when you are trading, what you're looking for um, are numerical patterns. So you're looking at these price patterns, and these these price patterns are seen as chart patterns. So when we see those chart patterns and we see the triangle, the Gartley, whatever type of chart pattern that is actually a price pattern. So the breaking it down is just price moving in patterns. But these price patterns are showing you the equilibrium of supply and demand. So the market always has to be in balance. So this balance is done through a numerical sequence. So this is why we have price and quantity, or price and volume. So every movement that is showing us that the price is moving in a certain way and according to the laws of supply and demand. So you have to look for these patterns within the price action. And in Jesse Livermore's trading, he only traded in trending markets. So he only followed the trend. So you have to always follow the direction of the trend and avoid ranges in that way. And he was focused mainly on pivot points. So pivot points are the areas where a person is able to capitalize on a trade in terms of knowing where a movement actually begins. So a pivot point is pretty much like a breakout area. And then what he used to do is that he used to add more positions in a method called pyramiding. So when he's making a pyramid, it's that he's adding on to a winning position so that he keeps on improving. So he also traded on volume. So here we have price and quantity on the supply and demand scale, and the quantity is the volume. So the volume is the velocity. So he was a velocity trader, and he traded on volumes at the breakouts. And he used to be able to interpret the reactions and the retracements of price. When price is moving back, he's able to interpret whether the retracement is deep enough or is not deep enough, or should extend a little bit further or shouldn't. So all of these were elements that helped him to gauge the entries and the exits, especially in terms of retracement, because when price reacts or when it retraces, you have to be aware of the possibilities that could happen, because that could be a reversal or it could be a retracement. So if you're trading in the direction of the trend, this is the one thing that you have to overstand, because when you're trading, you have to be able to catch those pullbacks, those retracements, or those reactions. So another thing that is very important is don't fight the tape. So don't fight the tape actually comes from the trading adage that says the trend is your friend. This is what it actually means, or this is the basis of the trend is your friend. It actually means don't fight the tape. So this is a ticker tape, and this is what it looked like, that it would just give you the information on the stock or the commodity or whatever that you're trading, and you'd use this in order to navigate through trading. So all of these prices were given in fractions and in whole numbers and in fractions, so there were no decimals. So they'll just give you the name of the company, the volume that's being traded, and the current price. So why did Jesse Livermore lose anyway if he was such an awesome trader? So this is a very important question, because the reason he lost is that he was able to understand what he was going through. Okay, so 90% of the traders actually lose. 90% of all of the traders lose, and professional traders are no excuse. So you have to be able to have the mental fortitude if you want to win. So the reason why 90% of the traders lose is because of two reasons. The first reason is rules are not properly formulated. So the rules that they actually get are not formulated in the proper way. So they're not able to to actually have any basis of trading, because when you're trading, you're doing it on a platform. You have to go through a brokerage, which is the trading platform. So that platform is where you are standing. So if you have no understanding, you have no standing. So you're not going to be able to make any trade. So the other thing is that they don't follow the rules once they're actually formulated. Once they have a formula, they're not following the formula. So not following the rules is are the two reasons why Jesse Livermore said he lost his entire fortune. And it was a great fortune. It was one of the biggest fortunes that was made on Wall Street from a single person in a single era. And he made a really huge impact. So, this is the reason why so many traders lose, and this is something that you need to keep in mind in order to keep your money. So, you have to create a trading system with an edge. So, your system needs to have a proper edge, and you have to follow your own rules. You need to follow your own rules, which means that you have to have an edge that fits your personality and your character, and you need to be able to go through that. So right now I want us to go through Jesse Livermore's tape reading technique. So this is just going to go through the entire sequence of how he used to trade. So this is a very powerful technique, but very, very simple. Just like E equals MC squared. It's so simple, but the simplicity of it is the beauty of it. So he said that it took him 5 years to master this technique, and it could take you five, it could take you less, but the technique is as follows. Let's go through the Jesse Livermore's tape reading technique. So so what was going on was that this is the entire price that is moving. So price is moving in a bull market. So this is an uptrend. So in Jesse Livermore's entire trading technique, he was focused on trading price patterns. So these price patterns are given by the price charts. So price will come to these levels, will come to these areas of resistance. So this is what you would call a pivot. So you have to first find a pivot. So a pivot could be a resistance or it could be a support. And this is what it's all about. So when you have the pivot, then you see that the price comes near the pivot, dips, but it comes and breaks the pivot. So when it breaks the pivot, this is what we now modern day call a breakout. So when this happens, it's just you following the trend out of a breakout. So when he does this, he's doing this on a larger time frame, so he's able to wait for larger moves. But the principle can be used for day trading, and the principle can be used for scalping, because this is pure price action from the basis. So you're actually using the price action technique of the rhythm of this cash flow. So this current will move like this. So it will break this resistance, and then it'll establish a new trend going up. So another important aspect of this whole trading technique is the issue of a buffer. So the buffer is where you're able to tell whether or not you're in a trending market or a non-trending market. So when you have a buffer, you have this resistance already pointed out, just like this resistance, right? And then price breaks out of this resistance. So in this case, price comes back to this area. So it comes back to the previously broken area. And when price comes back to this previously broken area, it means that there was a buffer. So this buffer is support turning into resistance, or what I call a price flip. So when this price flip happens, it means that price has changed direction. So you use this as a buffer, and you use that pivot point in order to make a higher trade. So you have to wait for the pivot point before entry, and you have to trade in the direction of the market using pivots as a buffer, and you have to follow the price action very closely. So this is an action of you using price action with tape reading. So you don't trade when there are no trades to make, which means that you have to be very, very careful. There's a time to go long, there's a time to go short, and there's a time to go fishing. So if you know what fishing is about patience and worms. So you have to be able to wait patiently for whatever it is that your trade is going to be, and graciously accept a loss or graciously accept a winner. So another aspect of this is the money management aspect, which is pyramiding, which is when you add more to your position. So in this whole aspect, what Jesse Livermore was doing was he was trading in liquidity of the stock. So the liquidity was so different at that time, and it is different right now. So this is his tape reading technique, and this is what actually made him a lot of money when he was trading. You've seen that his fortune was vast. But what was the downfall was his entire mindset and this entire lack of self-discipline and self-control. This is why it's all about the ways of the samurai. This is a business of self-discipline. Everything else can go out of the way. If this was about intellect or anything like that, then I wouldn't be trading. If this was about smart people, then there would be so many people who are making money in the markets. But the reality is 10% are consistently making money. So here we go. This was or is Jesse Livermore's edge. And this is how you read the tape. Everything we went through is applicable if you start reading the tape today. So this was used 128 years ago, but you can still use it today, because this is how the market keeps on moving. The market keeps on rolling. There's nothing new on Wall Street except the money that's being made. So all this new money has to be made today. So sleep, eat, and trade, and that's all I have to say. So I'll see you in the next video. If you are interested in becoming the ultimate trader, just get the Ultimate Trader book and read through it, and get some insights on trading, on the mental aspect, the monetary aspect, and the methodical aspect, and make your trading better. Just add on to whatever you have already in your arsenal, and just stay awesome. I'll see you in the next video. Thank you so much.